Carl refers to the environment, I better educate myself as to what trading algorithms were all about. Carl refers to them as the bots. It's as good a name as any. But computerized trading programs have a very long history. People have been using them to trade around the volume-weighted price for a number of years, but they never dominated the session the way they have come to now. So to make a long story short, I started researching people that had familiarity with them, and I kind of thought in my mind that I was going to interview a bunch of people, see who was willing to assist me in expanding my understanding. And in the process of that, I discovered Algo Futures and met Carl. And Carl and I hit it off relatively quickly, and I shared with Carl all the research that I had done up to this point, and we had a lot of detailed conversations. And he explained to me exactly what he had done in terms of creating a suite of algorithms that I would describe as kind of detection algorithms, in as much as they read the order flow for you and they detect the execution sequence that is often imperceptible to the human eye, specifically now in an environment where trade occurs off the exchange. There are so many off the exchange venues. And what Carl has done is he has set up in the cloud various data feeds, and he then has written a suite of algorithms that determine things like when trade activity is being directed from one side, buy side or sell side, and this information then surfaces on the chart through a series of abbreviations. And so that way you can look at the chart and you can see for yourself what is going on with the computerized trading programs. So this intrigued me, and I decided that I would make a commitment to Carl's application, Sceeto, and I began to compare the order flow events that are surfaced through Sceeto with my previous research in terms of looking at volume at price data. And I was incredibly surprised that what was being surfaced on the chart was very consistent with what I was visually observing. And while some of the event alerts occurred at places that I wasn't skilled enough or familiar with enough to figure out how to take advantage of them, when they occurred at price levels that I had interest in, price levels where there was previous buying or interest or selling pressure, I found that they were extremely valuable in alerting me when an opportunity arose, and equally as important, something that I had found very challenging when I first realized how active these computerized programs were, equally as valuable, telling me when not to maintain a position or defend a position. In other words, if I was buying support or selling resistance, and let's say, for example, selling resistance, and a sequence of high-frequency buy programs were initiated, being able to see that on the chart really helped me in reacting fast enough to either cover my position or put a stop in. And so I found that I got two benefits from it, not only assisting me in deciding when to enter a trade, but equally as valuable when not to hold or defend the trade. And so Carl and I decided we would team up and work together, and that's eventually evolved into Follow the Bots. And we'll talk a little bit more about that later. But for those of you who have visited the website and have listened to our live broadcast, as I've been saying here now for some time, I really am only presenting a portion of the event alerts and the aspects of the various algorithms that Carl has developed. And Carl will today go into way more detail than I typically am able to articulate when we're doing our live broadcast. So Carl, that pretty much, I think, puts the ball back in your court. Unless there's anything else you'd like me to discuss, why don't I turn the mic back over to you?
All right. Thank you, Billy. Thanks for teeing me up. And we're going to do something a little bit differently. I see that quite a few people have been on some of our webinars before, and I do see some new faces. And I think, as a lot of people know, Sceeto is a very big product. So we're not going to talk about Sceeto as much. We're going to talk about the bots, and we're going to talk about what we would consider 21st century tape reading. So let me just give you a brief overview of the agenda of what we're going to try to punch through today. We're going to talk a little bit about how the trading bots actually affect the supply and demand balance. And if you're familiar with what's called price discovery, we're going to show you examples of how the presence of the trading bots and the activity of the trading bots in and of themselves will change price. And we think that's really cool. And what we want to do is go away from just this intellectual concept that people are familiar with to just showing you a ton of examples. The bots showed up here and price moved. The bots showed up and price moved. And we want to really visualize and get people just attuned to like how dominant these bots are at the right price levels, and how effective they are moving in moving the market. And I think we kind of teed up this webinar on like how to beat the bots at their own game, and that's really it. Like if you're waiting in the tall grass and you know where these bots may show up, and if they show up, they're going to leave footprints for you to follow. And we think that's a pretty amazing concept, because we'll just show you a bunch of those examples today to start training your eye. And really what that is really 21st century tape reading. So I don't know if everybody's read some of the old books, you know, Rolo Tape, or, oops, can you guys see the PowerPoint that I have up that says today's agenda, or do you see still the old slides that I have up here? Ah, sorry about that. I am going to pivot over, and bear with me a second. There it is. Okay. So here's the agenda, and I apologize for that. You guys keep me honest. If you have any questions, shout them out. We'll do our best to answer them in real time, but it's tricky. We're going to leave a little time at the end, but we will try to get all your questions answered. So really, what we're talking about is 21st century tape reading. And if you've read Reminiscence of a Stock Operator, or what was that book by Rolo Tape, or any of the tape reading stuff, there are key concepts to tape reading. And I know a lot of people are obsessed with tape reading. You know, we consider ourselves tape reading, and what we're going to show you is really today's 21st century tape reading. Because the tape reading, I think, is something that may be 100 years old. The art is 100 years old, 120 years old. I'm not sure how old the ticker tape is, but the science of tape reading has evolved dramatically. So the art is still there, but the science has changed, and I think we have a handle on it. And you'll see how the presence of these bots actually can enable you to be a better trader, trade more easily, and that these guys really aren't the foe. I think we had a slide up there where the New York State Attorney General is going after the HFT guys because he says they're cheating. And they are cheating, but right back at you. I think in today's markets, with today's technologies, you could just, great, we'll ride your coattails. And we do have a question. Somebody's asked if the webinar is being recorded. It is being recorded, but it'll take us a couple of days to get it out there. And what we're going to do is we're just going to look at tape today. We're going to look at the tape from a day before the FOMC up through today. and we're going to ask just basic trading questions. Am I buying support? Am I selling resistance? Is this wedge? Which way is this wedge going to break? You know, is the market going to continue on to the next known price point, or is it going to fail? And what we want to do is we want to show you price, naked price, and then show you the bots on top of it, and see if you can start to interpret how their behavior affects price, and then take the next logical step, which is then how do you piggyback that information or use that information to trade and then follow the bots. So we're going to look at specific examples of how the HFT bots lifted the market. We're going to look at specific examples of how HFT sells bots. I don't know if you can hear the phone ringing in the background. I apologize. That's probably my parole officer checking in on me again. Can you take that in another room? Tell them I'll call them back in an hour. Sorry about that, everyone. We're going to look at how surges in order flow momentum presage price moves. And we're going to look at a very cool phenomenon about how retail order flow generally gets it wrong. So retail traders trade differently than bots do. Bots are programmed and they follow an instruction set. If you tell the bots to buy, they buy. If you tell a retail trader to buy, he may choke, he may double down, he may get stopped out, he may buy late. You know, retail traders are much more emotional than the bots. And we're going to see many examples of how this happens in real time, where retail traders get it wrong at the wrong time, and you can take advantage of that. So bots have a tell, and we'll talk about that in a little bit. We're also going to show you specific tipping points in the market where we see a rotation from buyers to sellers and vice versa. And we're going to see pre-indications. This is very important of whether support or resistance will hold or will be breached. And this is what I think Billy was referencing to earlier. He said that he uses a lot in his trading. Am I going to buy support? If I buy support, am I going to hold it if the bots are selling? Nope, I want to cover, I want to get out. And we're going to show you a ton of examples just to start training your eye. Okay, so some things to keep in mind. One, today is we're going to inundate you with information. It's not fair how much we're going to load onto you. We have a lot of educational artifacts that are ready for your perusal. So we're going to go quickly over a couple of like order flow topics, bot-centric topics, but we won't be able to drill down into it. But we will push out hyperlinks that have like PDFs and videos and documents that say, oh, you know, oh, this is how you do it. So if you have some questions, you can drill down through that or open a support ticket if you have questions, or throw it up on the forum. Okay? Another thing that's very important is, even though the regulators may say they're going after the bots, these things are here to stay. So we're going to be here in this market environment where the bots are dominant and the bots are making the decisions for quite a while. So it's something that there's plenty of time to adapt to. And also, I think that the bots are presenting endless trading opportunities, which is a really cool thing. We have a question that says, if the regulators ever control the bots, won't your methods become less effective? Yeah, I mean, it's going to morph and change, and we'll see what happens at that point. But right now, you can see in real time how price and bot activity are synchronous or congruent. Okay? So we all know that the markets have changed. We've got flash crashes. I think I read an article that said there were like 18,000 flash crashes or some crazy number like that over the last 5 years. We get the high-frequency trading bots. We got these super high periods of high volatility. And then I think if you're a trader, you've seen this a lot. Then there's no volatility. The market essentially gets turned off. The market will stay in what we call the up to, down to range, particularly the S&P, for hours at a time. It'll just grind through orders as if the bots decided to compress everything and say, you know, we're not going to let it go. We're just going to sit here for hours. And if you're an active trader, I think you may find that a very frustrating thing, because it's very difficult to trade in that grind. We do one of two things. We either scalp or walk away. Gregory's noting that yesterday was high volatility and then it stopped at 1698. So we have some things to help with that, and if we have time, we'll go through that. So I think most folks know that 70% of all trading is done by automated trading bots, and that depends on the study you get. And that I believe that the presence of these trading bots has fundamentally changed the personality of intraday price moves. So There are still ABC retracements, but there's many more frequent times where the market goes straight up or straight down. And there will not be a 4-tick retracement or 5-tick retracement for 15, 18, 20 ticks. So if you're looking for that pullback and you want to get in, and let's say the market is going up and you say, oh, I'm going to wait for a pullback and buy, those opportunities may no longer present themselves. But in those instances where the market is going in a straight line, generally the bots are leaving their footprints all over the tape, and you're given hard evidence in real time that you could just piggyback right on with a market order and you're safe to trade. So I'm going to punch through these, and just again, there's a lot to learn. If we can't get through everything today, forgive us, but we have a lot of educational artifacts behind this to back things up. And the one thing I just want to talk about briefly is if you're a poker player, you know the concept of a tell. Is anybody familiar or not familiar with what a tell is? So a tell, if you're a poker player, I see some people say, let's say you got a couple guys sitting around the table, and you notice that Joe's playing with his cell phone, and Joe wins the hand. And then next week, you're at the poker game, and you see Joe playing with his cell phone, and he wins that hand again. And the next week, you see Joe playing with his cell phone, doubling down on his bet, and he wins that hand. Joe's fidgety because he sees he has a good hand, and he wants to play well. He wants to make some money, so he plays with his cell phone. It's an unconscious movement that he does. So if you're playing against Joe week after week, and the next week Joe starts playing with his cell phone, that's a tell. That's a tell that you better back down, let Joe take the hand, don't let him sweep. So bots also have tells. They're very frank in their behavior. These bots, particularly in markets like crude oil, gold, the euro, the DAX, the S&P 500, they must trade in the futures markets, out in the open, at the Chicago Merc, at ICE, at Eurex, where we can see their activity. So they have tells. They will leave their tells on the tape. If you're a 21st century tape reader and you know their tells, they're very obvious, and it makes for a very easy trading environment, let's say. I have a bunch more I have a bunch more slides, but what I'd like to do is, just time permitting, or time is I know going to be a little tight, let's jump into some charts. And bear with me while I tee up and switch over to NinjaTrader. And how many people here use Ninja? Okay, we have a lot of Ninja people, some Sierra folks. Yes, is a second platform. I like Ninja. It's very easy to work with. TradeStation, good. A little smattering of everything. Oh, more and more TradeStation people I'm seeing more and more recently, so that's a good thing also. So I have just put up a chart of the 17th, September 17th. That's one day before the FOMC. Can you guys see that? Great. Oh, Jazz is on. Hey, Jazz. I see a lot of familiar names, so I appreciate everybody spending some time with us today. So somebody's asking about the time period. What this is a 4-tick range bar chart in the forward E-mini S&P 500 contract. And we tend to shy away from time-based charts. We only use price-based charts, so another range bar charts, momentum charts, things like that, because if you're looking at bot activity and you're looking at order flow, tick charts, range bar charts allow you to marry the very specific order flow events to the price changes, and then you can see the efficacy of the bots there in real time. If you're using a 1-minute chart, you can lose a lot of like that granular price behavior and really not know what's going on. And in these markets where the market will go sideways for 2 hours and then take off like a bandit, we want to keep time out of the trading equation, at least visually. So this is a really cool exercise we've been doing lately. All you see is price, and you see 1, 2, 3 horizontal resistance bars. And I wrote here, will resistant levels be breached? Then I have some arrows to it. Because as a trader, If you're trading support and resistance, you want to know, am I selling support? Am I buying support? So if you just look at price, if you're looking at MACD, if you're looking at RSI, if you're looking at any technical analysis indicators, you have no indication really what the bots are doing. And I think that this is a really cool example. And over here, I put this price bar. 8:30 a.m., the consumer price index came off, and that's what kicked it off. Right around here was the open. So the pre-market from between the consumer price index and the open at 9:30, and all times are Eastern, was still below these horizontal resistance levels. And let me just show you how I grab these. Basically, if you are taking a bunch of the known highs, boom, 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 you'll know where support, where resistance is. How many support and resistance traders do we have on the call today? Good, a bunch. This is really very good. If you're a support and resistance trader, the bots will tell you what's going on. So what I'm going to do here is I'm just going to leave this chart as is, and I'm going to right-click, and I'm going to load up a template just to load up very specific bot stuff. Now, there's a lot of clutter. If your eye is not used to all this information, it's a lot of clutter. But if you look at it a little bit, and we'll try to walk you through it. Here's the first resistance line, 1691.25. Coming up just before it, we have this green lettering, STI and HFT BS. And BS, I don't know what you're thinking it means, but it means a buy surge. And STI means a strong tape imbalance. So coming up just before you're hitting support, resistance, you're starting to see the bots buying. So if your inclination is, I'm going to sell resistance, this is going to give you a clue to sit on your hand. This is the tell. This is the tell that we've been talking about at the poker game. The next bar over, this is exactly when the consumer price index was kicked on. We had a high frequency trading buy surge, BS. That's a buy surge, and price went through the most recent support. And this is an important resistance because this was the overnight high in the Globex. So in terms of supply and demand, there was no more demand up here for the whole overnight section. Tick through here and boom. That's another tell. You don't want to be selling resistance. Next known area. We see up here, the next known area is 1692.50, and I think I pulled that because we had a tap here coming into the close. And we see BPW. If you're not familiar with that, that's an algorithm that tells us that the buy programs are waning. BPW, buy programs waning. And I'm going to actually take the abbreviations off so people can see what we're writing up here. Bear with me a second. The buy programs are waning. So we saw this buying surge and coming up, hit the resistance level, and just as we'd expect on here, the buy programs waned. Now we have a question, is the buy programs waning a sell signal? No, we talked earlier about tipping points. So we have some color coding let's get your eyes used to. Green is buying, white is neutral. Red up here is selling. So white is just telling you that the buy programs are waning. They're not on in full force. They haven't turned off. They're waning. They're slowing down. That's a tell. So what happens next? It happened right up here at 1693.25 is a very important resistance. If I'm a support and resistance trader, I'm looking to sell resistance. I may have an order in here to sell. I may be waiting for a lower high, but if you see this here, a buy surge, you don't want to sell resistance. The bots are buying. So not that the bots are smarter, but the point that I think is interesting is sometimes the bots may appear smarter, but what's actually happening is the bots are chewing up so much of the volume. If the bots are buying, they're taking out all the inventory and liquidity that's in the order book. So price discovery is going to force the market up. So the presence and high activity of the bots is going to affect supply and demand, which is going to affect price discovery, and the buying pushes price up. The next price point, the next bar, you can't see it all because there's a bunch of activity going on here, but we have another high-frequency trading buy surge and more high-frequency trading buy surges. So if you're a resistance trader, if you're following the bots, if you're looking at the tape, you know to sit this one out. Don't sell this. And that's a good thing. That's how we follow the bots. So Ed is asking a question. Ed's asking, when does the text print above, below each 4-tick bar? And does it remain once it's printed? Yeah, the text gets created up in the Sceeto cloud. We put a timestamp on it, sends it down to the Sceeto client on your machine, and prints it right on your chart whenever that happens. It could be intra-bar, it could be the end of the bar, or the beginning of the bar, but there's a second-based timestamp, and it just goes up there, and it remains. Now, if you're saying, I want to buy the breakout above resistance, if you're not looking to sell resistance, you're the opposite of that. Boom, here's your indication. Is it okay to buy this breakout? Is this a fake breakout and the market's going to turn around, or is this likely to punch through? Seeing all this tape, all this bot activity, it's likely to punch through. Now, I have a really cool thing that I want to show you. I'm jumping ahead a little bit, just to draw your eye down here. If you're not familiar with what this is, in this lower pane in NinjaTrader are 2 lines they go across. One is red, and green and red is one line, and one is white. And this is where we break down order flow momentum, and we use that term specifically, order flow momentum. That's the rate of change of order flow, momentum. White is retail trading. The green and red is institutional trading. And I think earlier we talked about how retail is often wrong at the wrong place and the wrong time. It happens all the time. Retail, the white, is below the green and red lines. So retail being below is more bearish than institutional. Now, why would you want to be bearish when the market is breaking through resistance, and resistance should now become support? So retail's wrong. And that's how we do modern day tape reading. So if it's okay with everybody, what I want to do is just keep going through very specific examples like this. Price, tape, price, tape, price, tape, to start to see like how these bots are doing what they're doing, and then show you how you can piggyback on the bots and really beat them at their own game, because they are leaving very distinct footprints that, if you're familiar with classical tech analysis and how to gauge the market, how to set up your market structure, the bots will give that last tell to get you in. Pete's asking a very good question. He's asking, is retail always wrong? Retail is not always wrong. No, not at all. But retail has a tendency to be wrong at the wrong place. So there are certain times you want to go and look at what retail is doing. That's really when you're entering. So Pete, I look at retail at the last moment, not all day long, but like if I want to buy, if retail is more bearish, that's a good thing. If I want to sell and retail's just got bullish, just got more happy than the institutional, that's a good thing. And that's how we use it. And you'll just see a bunch of examples, Pete, of how retail just really doesn't get it. They don't have the tools. Yeah, it's a contraindicator, Pete. So I'm going to punch over to the next day. So this is the day before the FOMC. So how many people were trading the FOMC day? And how many? I know some people say I'm sitting it out, and some people say I'm doubling down. So far we have 100% yes. Nobody's sitting out the FOMC day. Oops. Bear with me a second. I want to just set up the still 100% yes, as everybody. Fantastic. And it'll just take me a moment to get this chart ready. The FOMC is a busy day. I put a couple of things on the chart just to acquaint your eye. So is there anybody, let me just so I can understand like how I should pace the conversation. Is there anybody who's a newbie who has less than, let's say, 3 months of active screen time on the call? And by the way, if you are a newbie and have less than 3 months of active screen time, we do have some stuff that'll help you with the learning curve. And we've created like what we call a basic setup, a 1, 2, 3. We won't have time to get into today, but we'll show you how to get access to that. Pete's saying a newbie's anything under 3 years. Okay, so we have the FOMC announcement here, right? The market took off like a bullet. Everybody knew that one, right? Boom. First stop was at 1706. If you're in the follow the bots broadcast and been following it, you probably knew that the 1706 was going to be a likely target because we were telegraphing that for a couple of days. But if we have time to get into that, we will. But the question that really is important to a trader is, after the market took off and went to 1706, did its first pullback, a little pullback here, but this is all within 7 seconds of the announcement. Is this going to be breached? Is the market going to go for another run up, or is it going to go down? That's what we want to know here as a tape reader. We know that the market went up. Of course, we're looking in hindsight. A, B, C, pullback. We want to know, is this a pullback or continuation? Because the market then went into this consolidation range. And what we want to know here in this range, is the market going to consolidate? Which way is it going to break? Eventually, that's the break. It broke to the upside. And I'm teeing these questions up because I want you to start thinking, is there a tell from the bots? Are the bots going to leave their footprints here at each of these very obvious, technical analysis stages or locations? Are they giving us a tell what we could jump on? Here we have support. We want to know if support was held. We want to know if resistance was going to be breached, and on. We have here, I'm going to show you here, on this move up, we had a high, higher high, higher high, higher high, higher high, higher high, higher high, lower high. This is the first lower high in the lunge. Is it significant? And here's the great question if you're a support and resistance trader. Will the prior resistance become support, and will this support hold? So this is what you want to know. So what I'm going to do now is just what I did before. Let's just lay the bots on top and see what the bots were doing at each one of these points. So I have a template ready. Here we go. Okay. So we have here the FOMC announcement. Right at the announcement, you have a yellow tick ratio here. That's kind of important. If you were trading this announcement, this was essentially instantaneous. So as a manual trader, you had to have like a buy stop in before if you were trading up in this range. But what did we see beforehand? We saw before the announcement, we saw some sell surges coming in. And then we have down here a sell program's waning. And let me change this so people know what that is. Boom. We had high-frequency trading sell surges in the morning. Then it got quiet. Right here at the low, we did see a sell program's waning. At the very, very, very low of the day, we saw that the bids were replenished. Now, what does that mean? This is a really interesting concept in terms of tape reading. The bids in the book, if you look at time and sales, or if you look at your dome, you can see the bids coming up all the time. The bids are always going to be replenished in the book. But what this algorithm does, it tells you that the bots are replenishing the bids in the book at a rate and frequency pattern that is consistent with prior market turns and or bottoms. So that's what we mean by bids replenished. We don't mean that the bids are replenished in the book. We mean that the bots are replenished them in this very distinct pattern that's a true tell, like we talked about the tell. Joe tapping his cell phone while he has a good hand. That's something to take a note. So the market was already teed up for what we call a trading bot rotation. And we have some educational material on a trading bot rotation, which is a very cool concept. And then Alex is, I think, going to try to IM everybody just some educational artifacts on what we call a trading bot rotation. We have a bunch of videos on that and some PDFs. It's a big concept to get through. We won't have time to get through it today, but the trading bots do in and of themselves rotate from buyers to sellers and sellers to buyers at certain points, and that's their tell. That's when you say, these guys have done something. They've made a change in their orientation. These bots are pre-programmed. This is done on purpose. It's another one of those tells. And what we see here is, boom, the market went up. This is crazy. All within 1 second is this price movement. But let's look at the next area once it's slowed down. I'm going to blow it up so we can see everything. The market stalled here. We saw the buy programs waning. And we see resistance. This last tick up here was 1705.75. That's very important if you're looking at the book. We saw a tick above 1706, tick to 1706 and a quarter, a double tap, 1706 and a quarter, but the buy surge is starting to come in here. You see it, a high frequency trading buy surge right there. right where we know that resistance is. So if you're a resistance trader and you want to sell resistance, should you be selling up here? Anybody comfortable answering that question? Correct. You don't want to be selling up here. You want to either be buying or sitting on your hands. Boom, another buy surge, and then it's off to the races. Market moves up, and here we go. Let me pull it back here. I think people are familiar with an ABC pullback, but then what we found really interesting here is an area of consolidation. It's 14.0, this starts around 14.05, 14.06, and goes through 14.09. So about 4 or 5 minutes, about 10 minutes after the announcement, for about 4 or 5 minutes, the market goes sideways. Uh-oh, what's going to happen? Sometimes, after FOMC, the market turns around, and sometimes it continues. You're in a consolidation period. If you're just looking at naked price, you're not going to know which way the bots are going. But here's your tell. Here's the Joe fiddling with his cell phone. Buy surge. Buy program's waning. And the sell program's waning. Right in here. It's fighting it out. Boom, another buy surge. When it comes up and breaches the high, I'll say, put it here, breaches the high here, we have a couple of different tells from the bots. I think there's some people on the call who trade this quite actively. This is the kind of trading I do. Like, this is my bread and butter. If you look down here, let's go back at retail. What was retail doing here? Retail, just like we saw last time, at the most important point when we're looking to breach this congestion area, what's the next lunge? Retail is below institutional. Retail's wrong. Let's look here. This is what we call MACD, which is really order flow momentum. Again, the rate of change of order flow. So as price goes up, and this is another critical concept of something we'll go over, you'll see over and over again, you see that order flow momentum is also increasing. How many people here are momentum traders? So if you're a momentum trader, oh, we had a ton of momentum traders. You know these very specific rules of thumb. If you have a higher high in price and a higher high in your momentum indicator, price is likely to continue on. Now think about this. If you're a tape reader, if you're a 21st century tape reader and you see a higher high in price and you also see a higher high in order flow momentum to the buy side, logic tells you that price should also continue up because there's more buying pressure under the hood. And we talked about those times when the market pulls up and goes in a straight line, but there's no pullback. That's one thing we mentioned earlier today. If there is no pullback, how do you trade? You say, oh, I want to wait for the breakout. I see it's going to buy. You know, it's buying. I'm waiting for the breakout here. And once it breaks out, I want it to pull back, and then I'm going to buy here. That's the way people used to trade like 10 years ago. There was going to be a pullback. Those days are gone. You have to jump in late. And the scariest thing in the world is to jump in late. But also, if you do it jumping in late into trades and into like these price lunges, if you do that in simulation on a regular basis, you'll find it's very easy. Because if price takes off, it's obvious. Your heart starts pounding. What I do is once I see this puppy take off, I look down here. What are the bots doing? Well, retail's flubbed it, and the bots are buying. I don't have any buy surges indication here, but order flow, it's all green. So if I'm late to the gun and I throw in a market order right here, let's say here we see the higher high. Even here at 17.1250, the market runs straight to 17.15.50. That's 9 ticks. So if you're a 2-point trader, generally those kind of things where it's late to the game, there's generally another 2 points in the run. And we'll show this over and over again. So I'm just going to keep punching through examples of like what the bots are doing. Now, we know that. Let me make this a little bit tighter so people can see more. We have a question here. The market came down. And is this support? We see the buy surge, the sell surges come in, right? But price doesn't push through here. So all bets are still off, right? All bets are still off. As the market lunges up again, what happens? Our friend, the retail trader, gets it wrong. And order flow momentum ticks it up again, higher high. So we still, even if you're getting in late, there's 2 points run. Now we have resistance. It tapped up here. Buy programs are waning. I think somebody asked earlier, remember that's neutral. We're not sure what's going on. We just know things slowed down. But we have known resistance and known support. We're trying to figure out how to continue this FOMC trading. We're expecting continued volatility. And sure enough, the bots are selling. The bots are selling it down. We're looking to gear up to sell. We're looking to see them pierce through here. Get ready. It looks like they're going to pierce through support. But they never pierce through support. They don't. They rotate. They rotate the buyers. Okay, get ready. We want to sell. If you're a resistance and you want to sell resistance up here, I'm seeing that the HFT buy surge, reversals. So even if I don't want to buy, I'm not selling up here. And that's one of the great things I think that Billy will probably talk about later. If you want to sell resistance, this will keep you on your hands, sitting on your hands and out of trouble. If you want to buy the breakout, it's going to let you know right here in real time, the bots are buying like mad. The bots could be wrong, but the presence of the bots themselves will usurp the inventory in the book and force price discovery up. And sure enough, we see the same stuff we always see if we look deeper into the tape, you know, the higher highs. And what I wanted to do really is like the last 10 days we'll go through this stuff because people say, maybe you're cherry picking, maybe you're not. We're not really cherry picking. It's pretty much day in, day out, this kind of stuff. Boom. And we know if anybody's taken, I think, the CTA exam or whatever it's called, MTA, whatever it is, they define a trend as a series of higher highs and higher lows, which is what this is. How do I stay in the trend? How do I stay in the trend? Well, if I want to buy late in the trend, is the trend still in place? Can I still buy? Everybody wants, retail still got it wrong over here. You can still buy. Now the market comes. We make a high. This is certainly tradable from here to here. That's a lot of room. It's a FOMC day, so we think that those intraday market volatility is going to be a lot. We see the bots sell it down. But will this prior resistance, right? This was resistance. Now it may or may not be support. We want to know, is it going to hold? The bots are selling it down. Looks like it may breach, but it comes in. It taps around here, goes up. The buying comes in, which is your rotation, and it doesn't really breach. It's a little thing. If you want to sell that breakdown, I wouldn't. I'd be sitting my hands, and then you can buy it up into the close. So that was the FOMC day. Is everybody comfortable with that? And I'm going to punch just to the next day. Let me be cognizant of the time. I know we have a lot of tape to go through, so I'm going to try to push some of the questions to the end. And let's go to, boom. I think this is the 19th. Oops. Tried to set it up earlier. Here's day plus the FOMC day. Okay? Same exercise. Pete's asking if we're going to do today's market. Yeah. Actually, Pete, as a treat, I'm going to have Billy do today's market so you can see a separate set of eyes and a different trading methodology and how that's going to look. So we have our known resistance. We have breaches of it. Remember, it's the day after the FOMC, so we're still expecting increased volatility. I'm going to go over some price points. This is 8 o'clock in the morning. This is 9:34. So right here is the congestion range in the pre-market. Everybody wants to know, are we going to have continuation? Or is the market going to fade? We all know with hindsight the market faded, but how do you know that in real time? You have congestion. Oh, the market broke up. If you're looking at just price action, the market broke up, then the market went down. Then if you're a wedge trader, how many people trade like ascending triangles or rising, falling wedges and those kind of things? Okay, we have a bunch of people I see who trade that. Here's a classic wedge, right? You need 3 lows, 3 highs at least. It looks very clean. Which way is it going to break? I don't know. The tape generally will tell you when there's a wedge, and it's a very good exercise to draw a bunch of wedges, playing on price, and then throw some bot activity on top and see if you can train your eye. What I'm going to do is I'm just going to throw up the bot activity on top, and let's see what's happening in those areas. Here's your congestion period we talked about, just below the resistance. Retail's buying. right? Remember the day after the Fed? Retail was very excited. Yay, market's going to go up. Retail's above institutional, so they're more bullish. The market flipped, and what we see right here is the buy program's waning. Can't move that. Let me move that. And we saw a yellow tick ratio. Market went down. Here's your wedge. You got selling, you got buying, you got selling. But if you're looking at MacDaddy in the tape, under the hood, it's all basically selling. And MacDaddy is going to be your best friend. It's going to tell you the market's going to, sell pressure is continuing, sell pressure is continuing. Now I'm going to jump over to the next day. I think this is the 19th. Let me go to the 20th. Boom. September 20th is when the people got honkered. It was basically what we call a trend day down. Let me go like this. Let me clean this up so you're, boom. Trend day down. Hindsight's 20/20, right? Everybody's like, oh, great. I put these yellow circles here. Can you sell? Can you sell? How do you know in real time whether you can sell this puppy all the way down? You could scalp, you know, give me 5, 7, 11 ticks. Give me 5, 7, 11 ticks. How do you know? Well, the bots and order flow can tell you on a day like today. And we do have a bunch of educational information specifically on this because this is a pretty deep concept. But I'll show you quickly. Boom. If we look here where I pointed, that's this orange circle, this yellow circle. You'll see here, if we look at MacDaddy, and you remember MacDaddy's order flow momentum, we had the bots were selling. All to the sell side, went green for a moment, came back down. It reverted back to just selling pressure. Price is going to follow. Here again, that pivot, do I know if I can sell it or not? They're selling. Little buying back to selling, it's okay to sell. And when I say sell, I mean the close of this bar, which is really the open of this bar in a range market. You're in around 17.14. There's a straight move down. And you'll see that happen over and over again. Boink, right a resumption to selling. Boink, resumption. On and on and on and on and on. Pete's asking if this stuff occurs in real time or close of the price bar. Everything is in real time. Everything is in real time. But when you trade MacDaddy, if you're looking at this, I tend to ignore the intra-bar measurements, Pete, of MacDaddy. I wait for the close of the bar to make my determination on the 4-tick bar. Okay? And I know we're going to be running late, so I hope everybody can stay a little bit. We're going to have to run a little bit longer. I think we committed to an hour, but a lot of tape. Bear with me. Let me clean this up so you can look naked price. Boom. This is how I learned to trade. The market would go down. I would buy here. I would buy here. Then I'd buy here. Now I'd be like 4 contracts in the hole. Oh, the market went up. I'm good. I'm averaging here. The market would go down here. I'd buy again. The market would go down here. I'd double down, double down. Now I'm like 16 contracts in the hole down here, or I'm dead. So the market makes these lows. Everybody knows these lows, but which low can you buy, right? Everybody wants to buy the low. So I'm just going to quickly put the same template on that I've put on every chart, and boom, the bots. You'll see it's pretty good. It came in, there was a bounce. Came in here, really no buying. Here, there was some buying. Market turned around. A little bit of buying. So if you followed the bots here, you would have gotten stopped out down here. It did turn around. You're never going to have a 100% system, and I don't want to come off saying, like, if you just follow the bots, it's 100%. You know, this is real-time data. There's a lot of nuances and factors. Nothing's 100% there. But let's look what happened in the next low. Really no activity. And now we have the low of the day. And we have a magnificent, absolutely magnificent amount of buying. And this is what I mean. Boom, 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 boom. And let's look at MacDaddy. Oh, my God. Look at all this steady buying. Even here, before the low is put in, they're buying. It's to the buy side. And we talked about the momentum traders. If you're a momentum trader, you're going to see higher highs, and you're going to see higher highs all the time, which means price is going to move up. And I do want to show you one more thing, because this is always going to happen. And again, this is not retail's perfect or not, but certainly right here at the low, at this low bar, What does retail do? Retail ducks below institutional. It ducks above and above many times. Well, a couple times. It really is leading here, but right there where it counts, it made a decided duck below. And it's technically a divergence. If you're a divergence trader, you have the low of this bar is lower than the low of this bar, and the high of this bar is higher than the higher of this bar. And then a lot of people have programmatically done this in Sceeto to look for divergences. And this is a safe place to buy. It's a safe place to buy. And even if you bought here and you got stopped out, you're not going to have a problem. But if you buy here with all this bot activity, with all this tape in your favor, you have a sense of confidence it's likely to go up to whatever your next price point is. We have some questions about CL. We do have CL. We do trade crude. We have somebody asking where the stop loss is. I tend to put a stop loss in one tick below. If I'm in long here at 90.75, I'm going to have a tick in somewhere around 89.5, 89.25, and then I'm going to move it up once there's a one or two price, in there, depending on it. But I'm going to tighten my stop up pretty quickly. But again, one thing is we're going to have Billy come on. He's going to show you how he trades. And Billy trades very differently than I trade. And the thing is, with all this magnificent technology, it's important to find an approach that works for your own trading methodology. How much screen time you can allocate every day, how much screen time you've had, how much risk tolerance you're comfortable with from a psychological level, how big is your capital, are you using this to live off, is this a hobby? So there's a myriad of questions that have to be answered before you use specific trade setups. What I'm just trying to show you today is open your eyes to how much real information is available to you in the tape that you can slap on any existing chart, slice or dice. Somebody's asking about the DAX. We can't get into the DAX today. I don't think we'll have time, but we do have algos for the DAX. And I'll do, let's see, this is the 23rd. If people mind, I'll do one more day and then turn it over to Billy so he can do today, and you'll see a whole separate view. Boom. Again, trade below. We want to know, did anything happen at the tape here? And then if you're a support buyer, right, is it okay to buy support? And if you're a resistance seller, is it okay to sell resistance? So if you trade support and resistance, this stuff goes on like clockwork all the time. I'm going to put the same exact template that I always put on so there's no changing the approach. And let's just look at what happens. Do you want to buy support? The bots are selling down here. This yellow thing is a sell indication. You're not buying support. If you sell support, there wasn't much follow through. There was 89.5 to 87.5. So there's 2 ticks, 2 points of follow through, about 8 ticks. Maybe not a great sell trade if you tried to sell through here. There was no selling afterwards, you'll notice. No after selling support was breached, but certainly it would keep you up from buying and going through the pain of dealing with being offsides right out of the gate after you bought support. We'll notice what we have here is a yellow tick below bar. If you see this yellow ball below, that means there's a bunch of like upticks at the CME. If you see the yellow dot above, there's a lot of downticks at the CME, and that's going to give you an indication of which way price is trending. And sure enough, our friend Higher High and MacDaddy is screaming down here at the low. Look at those readings. And the market takes off like a bandit. Now, we know we have resistance. If you're a resistance trader, am I going to sell resistance up here? And what I hope after, I think we've gone through like 20, 30 minutes of these examples. If you want to sell resistance, if you're following the bots, you're going to sit this one out. They're buying, it comes up. I see no selling up here. I see no selling. It's still here, buying, I'm not selling. It's going to keep you off sides. Or if you want to jump in, you can go. So what I tried to show you is just a bunch of the kind of same stuff day in and day out that we follow the bots. And this is how I think you can beat the bots at their own games. We're a little backed up on questions, and we're going to run way late. So I appreciate everybody's sticking around. I'm going to have Billy do today. So you'll see what a second set of eyes look like. And then afterwards, we'll actually talk about Sceeto, the software, and give you a promo code. So if you want a discount on Sceeto and you want to learn about Follow the Bots, which is an educational offering we have, Please stay on. There's a lot of great material. So I thank you for your time. And Billy, I'm going to turn the floor over to you.
Okay, thank you, Carl. So Carl gave a lot of information in a short time, and I'm going to focus just on one day. I'm having an issue here, Carl, getting my screen up, so hang on a second. You can tell me if my...
Yeah, I see it coming over now, Billy.
I see it coming over now, Billy. My screen's showing now. Okay, very good, thanks. Okay, so as Carl was going over his presentation, he was showing a series of slides without any data on them. I haven't set mine up in order to be able to do that. So this is today's session. Any of you who participated today would be aware of several factors, and so the main factor is that the S&P has been selling off from its most recent multi-year high up in 1727, and yesterday we had a pullback down to 1687, 1688, which had been the low during the prior week. Now, unlike some of the setups that Carl showed you, I tend to focus my attention on areas of support and resistance, and I'm not as inclined to jump in or get involved in the middle of the trading range. So let's talk about support and resistance. I'm going to first bring over yesterday's chart. So here was the low that the market pulled back to yesterday, and here was the high that the market traded up to yesterday. Price had been stalling previously up at around 96 and 98, but yesterday the range extended slightly above there, traded up to 1701. You'll see that on this chart there's a regression channel. This is called the polynomial regression channel, and it's configured so as to catch the rotational, intraday rotational swings. And so events that occur at the upper and lower band of the channel, especially when they align with previous support or resistance levels, are the areas that are my main focus of attention. So in the morning, price comes down to the prior low. There's no particular indication here of any type of order flow events. This is happening here during the overnight session. So not much activity. The range is relatively narrow, no follow through overnight to the upside. In our method of analyzing support and resistance, we put a lot of effort into modeling the market, and we share this at the Follow the Bots website. And typically our research shows that you will normally find stops resting below a prominent previous low, approximately 2 points. And if you go over to the Follow the Bots website, you will see that that statement is not something that I'm saying here now just because it fits the activity. I put that statement in our market structure commentary last night, and I put it in this morning at about 4:30, 5 o'clock before the open. So I was expecting to see the S&P pulled back and probe for stops below the prior low. And this indication that you see here, SPW, sell programs waning, which Carl described as being the neutral event alert. This is one that is extremely important to me. I look for this event to occur as a precursor in many cases to phase my entry. I also have overlaid on this chart what are called digital filters. The bigger thick orange one is called the Kalman filter, and these two smaller filters are Gaussian filters, and I have these dialed into a very micro setting, and this is a little different than Carl's chart. This is a 5 tick instead of a 4, and what this is calculated to do is to kind of count for you the trade sequence. So here we're coming down. Price is trading prominently at the bid, more trade at the bid. Then you have the sell programs waning. Following the sell programs waning, the sequence of trades, in other words, more trade occurring on the downtick than on the uptick, more trade occurring on the downtick than the uptick. Here's where the situation turns, and on the turn, at the lower band of the polynomial channel, you have your opportunity to determine two things. One, seeing the development, does it make more sense to you to be a seller, thinking that the market is going to break lower? So that's one proposition that you can contemplate. And you can certainly see that the computerized trading programs have ceased executing to the sell side, and the sequence, as delineated here with the 5-tick range bars, has already turned up. So go long, go short. And if you then make a decision, and we'll use the example of going long as that's what I did here, then the next question is, where do you take profit? So the move moves up off of the low, comes back up to the middle of the channel, and where do the trading bots, the computerized trading programs, cease buying? Here's where the buy programs waning come in. Now, I look at these from two perspectives. One, because the buy programs have ended, that could be a rationale for me to think maybe I should take profit on my long. Secondly, if the occurrence of this corresponds with a previous high, this then becomes a precursor for my considering going short. So we'll come back here again so you can see where the selling was yesterday. Apart from the minor uptick to 71, the real selling yesterday and the day before has all been up at or near the 96 to 98. In the context of this morning, the S&P auctions up shy of the 96 level, but when it trades up to 1695, you have your first order flow event alert where the computerized buy programs are no longer executing buy side. So I heard from some of Carl's comments, reading some of the comments, people were asking, like, do these appear in real time? Do they go away from the chart? And indeed, they appear in real time. And when I first started using these, I would look at the event. Now, I also have a volume at price chart up, and I use my trading dome as well. I have a volume profile on my trading dome. And I look to see whether or not the event that surfaces on the Sceeto algorithm corresponds to what I see on the volume at price chart. And so here there was what we call terminating volume. In other words, as the market was being bought, there was greater volume here on the uptick very consistent way of looking at when the upward move exhausts. Then you have the downturn in the price sequence, and hopefully my description here of the price sequence makes sense. I'll try to repeat it. Here you see the execution sequence coming in on the uptick, on the uptick, on the uptick, minor pause, on the uptick, buy programs waning, minor pause, the downtick, and then here's the opportunity to look to get short. And the expectation here is that price will pull back at the very least into the midpoint of the polynomial regression channel. Actually, it went all the way down to the low of the polynomial regression channel. And then we had this event through the remainder of the day. This is one of the most challenging patterns to trade. Carl referenced this briefly. This I've done a lot of investigation on, and this we feel, and I can show other academic research on the subject as well. This is the tell or the sequence where there is no real outside volume of any substance coming into the market. And the electronic market maker is now dominating, and the rotational sequence is up 2 points, down 2 points, up 2 points, down 2 points, up 2 points, down 2 points. And this we consider to be the high-frequency market maker algorithm. During periods like this, obviously the profit potential is restricted because there isn't really a run. No real directional run comes out of this. In time, a bias will develop and a directional run will come out of this. And of course, that's the risk of participating here, because if you happen to be on the wrong side of it when the break occurs, then you could give back the usually 6 ticks is what you can scalp out of this. If you try for 2 points, very often it will uptick for the second point but then not fill you. This pattern is called recursion, and this is a computerized loop wherein the market maker is trying to disguise their intent, and I would argue that this is designed specifically to take advantage of the momentum trader, because it gives you the visual illusion of there being momentum. So you're looking at this thinking, oh, it's going to go lower, it's going to go lower, it's going to go lower. And by the time your button gets pushed and you decide, I'm going to sell it, that's exactly where it ends, and then it recurses and comes back up 2 points. So this is traded by taking the opposite side. In other words, you sell the uptick, you buy the downtick, and you look to scalp 5 to 6 ticks in the middle. And that can be done during periods of stagnation like we saw this afternoon. That can be done consistently. So I think we put a lot of information in front of everyone, and it'll take time to digest all of that. I don't know if you wanted me to quickly go through what's available on the website now or not, Carl.
Yeah, I think maybe spend like a minute or two, because maybe if I could tee that up, Billy.
Sure.
So, you know, Sceeto came out about 1.5 years ago, and one thing that we heard consistently was like, it's too big. It's a big product. It's big. We need more insights, real-time insights. What's going on? What's going on? So Follow the Bots came out of the requests from all our customers to say, how do I use it? So Billy and I spent a long time. We started building Follow the Bots in right around Thanksgiving. And we are a little behind schedule. We thought we'd have it out in like 3 months or so. We kind of got it up over the summer, and we've been really road testing. We want to get it out there because what Follow the Bots is a very content-rich site where you're going to see everything. And Billy is the primary content creator on that site, and there is a plethora of goodies that get updated daily. There's also real-time streaming in there, and I just want to tee up Billy to show so you can see, like, actually I'll back it up, and I'm just going to turn the floor back over to you, Billy.
Okay, well let's just take a quick look here at the website. So this is the Follow the Bots website, and as Carl said, we have a lot of different information. I'm getting kind of an echo back, Carl.
I'm going to mute. That's why. Sorry about that.
Okay. And so there's a lot of information here. I'm going to enlarge this a little bit. But what I think is most important is the market structure. So I'm going to just spend a minute here. We update this on a daily basis. So right now we're only filling in content for the S&P. We're going to shortly begin here by including the Dow, the NASDAQ, and the Russell on a daily basis. And in this gallery we have slides about what occurred during the day. And so I usually post at least 3 slides, a longer term view so that you can see what's been going on in usually the past month or sometimes longer, depending upon the pattern of development. Then I have a shorter term view, usually the past 2 or maybe 3 days, and then I add the chart of the specific day. And I highlight here numerically on the chart the trade opportunities that we discuss in our live broadcast. Now, below, this is part of the text that we post. We give just a short breakdown here of what happened in the various markets. But then we go into detail about what happened during that particular day session. And we think of this approach kind of as what you might think of as a debriefing. Debriefing is a methodology that is used extensively with airline pilots, astronauts, people who play professional sports do debriefings, where you attend an event or engage in an endeavor, and then you go back over that endeavor step by step and look at what happened, try to analyze your performance and or your thinking at that particular time, see what insights you can glean from that experience and carry those insights forward. So we break down the entire day. We talk about where the market paused, what order flow events occurred there. Then beneath that, we go through the current reference points. So the advantage here, and you can see I list the dates and a brief description, if required, about what the reference points are. So for example, I mentioned to you the 87s. So there's the 87s, the day ahead of time. I mentioned to you the 84s. There's the 84s ahead of time. And then we talk about trading opportunities, what we would expect to occur, why we would expect it, what the logic is associated with the trade opportunities, and how we would then pursue to exercise those. And that's listed on a day-to-day blog style, so you can check from one day to the next. We also provide a daily market recap So this is a video that goes over the market. We post that every day. Again, right now this is primarily focused on the S&P, but now that we've got our format worked out, we will be including initially the Dow, the NASDAQ, and the Russell. And then here, this last tab is where we do our updates. So these are our trade analysis briefings. And typically, I do at least 2, if not 3, in a day. So the daily morning briefing, I'll bring this up. This is what I put up in the morning. I live here on the West Coast, so I'm usually up at around 4 o'clock my time. I review the Asian markets, the European markets. I look at what's happened in the U.S. future indexes overnight, and then I lay out what occurred and talk about what trade opportunities might develop. And you can see here, I was expecting this morning that the market might probe down for stops and identified where the stops were going to be at 1685. And the reason I've argued that it would be worthwhile being aggressive there is because not only are the stops likely to be there, but in the previous week there was a 3-day high that was at the 84s. And so I think we do a very thorough job here in our first example of the S&P to describe what's happened, why it's happened, how to think about it, and if you are using Follow the Bots, it is our collaborative effort between Carl and myself to provide that type of detail information along with a live broadcast. I'm going to let Carl go over the broadcast because I think he's going to show something about that. If you want, Carl, I'll sign off of this and bring up the broadcast if you want me to. I'm going to turn the mic over to you now.
Oh, no, I think it's okay. I'm going to pull over the monitor back to me. I'll start broadcasting again. And I think the one point that Billy was making is not only is all that documentation there, not only is the video there, but we have a streaming broadcast. So kind of like a TV channel where you can see a chart that Billy maintains during the day. He comes on intermittently throughout the day and walks you through his thinking and the evolution of the market, just like the weather forecast. Oh, we were looking for this, and there is a string. There's an arc to the story that never ends with the market and the trading bots. And if you use that methodology that Billy just laid out, where there's the market structure available the night before so you know what happened, particularly with the daily market recap video, and then you know what we're looking at in terms of known resistance and support for the next day, and we also document how we expect the bots to behave at those points. That's all documented. And then in real time, Billy comes on the mic throughout the day and updates the thinking. This is what's going on with the bots. This is what's going on with price. And we think that's just a really cool offering to help people get over that learning curve. And then, yeah, Billy, if you want to spark that up, I will show it. Yeah, so sure, spark that up. And I'm going to change the presenter over to my screen. And there's a couple of ways to see the broadcast. Right now we have, I think you might have seen it on the website in and of itself on Follow the Bots. There's a button, and you can watch it just like in your browser. But what we are coming out with in the next week or so, you're going to love this, is you can watch it right in Ninja. You're going to be able to see the broadcast right on your chart in Ninja. Oops, bear with me a second. I'll set that up. And make it a little bigger so people can see. Can you see my chart, everyone? Okay, so it'll take Billy a moment to start broadcasting. But while that's coming up, I'm going to pivot over. Let's give that a moment because he's got to start the broadcast. I'm going to pivot over to another PowerPoint, go back to our PowerPoint, and I want to show you a little bit about Sceeto. I think people know Sceeto is a little bit of a different beast. It's a huge animal. We take Sceeto and we process information off of a lot of the global exchanges. And what we do is once we take that, we take the information from the Sceeto cloud after it reads it from the exchanges, the actionable harvestable information that you see, and we inject it directly into like Ninja, TradeStation, multi-charts, and Sierra charts. So that's our architecture. It's a little bit different than standard like loading an indicator. You're actually collecting data, ancillary data feed from the cloud. And some people have been emailing me or asking if we had a promo code. We do have a webinar special. So I want you to know Sceeto supports a couple different markets, the S&P 500, the Russell 2000, the Dow 30, crude oil, gold, Euro, DAX, and the Stocks 50. We were listening to our customers. Not only did they say we want more educational pricing, they said we want a little bit better pricing. The price hurdle might be a little high. So if you go to the website, it's $747 per quarter. That's around $249 a month. We generally give out a promo code we've given out to a lot of people. We do have a promo code out there right now, GotBots, that'll get you discounted for $597 a quarter, which is $199 a month. But for people on this webinar, we're going to start offering, like as a test market kind of thing, we're going to offer monthly pricing, which we really have never done before. Everybody's like, oh, can we have monthly pricing? And we're like, you know, if that's what people are asking for. So we have a promo code for folks who attended this webinar. It's 925TAPE. If you go to our registration page and you put that in, you'll be able to get Sceeto for $199 a month. Now, what's really cool is we have Follow the Bots out there. Currently, we're charging $39.95 a month for Follow the Bots. So that's all the market commentary, the videos, and the stream, the video stream, for $39.95 a month. But we're comping Sceeto subscribers. So if you're an active Sceeto subscriber, you get Follow the Bots included for no additional charge. And we think that's really good. We think that's good business for us. We think that's good for everybody else because we know Sceeto's a big product. We know people want a sense of community. We know people want ongoing references, so we're happy to take that on the chin, give that away for free because we think we'll all grow more together over the long run. So please, I encourage everybody. We have a 10-day free trial. So if you go to the website and you put in the promo code, you will get a 10-day free trial. The one glitch is like there's a PayPal form in there. You have to sign up, and it's one of these things like you sign up, and in 10 days, you automatically get billed for your subscription. That's the only thing we ask because, you know, we do give full tech support. We want to make sure everybody gets up and running, so we think that's pretty fair. We hope everybody goes out, everybody in a call. If you don't have Sceeto already, try it for 10 days. Go through a lot of these exercises that we went through. Look at naked price, do your standard technical analysis, then see what the bots are doing. Lay the bots on top of it. Go to Follow the Bots, listen to the broadcast, read the market structures, and it will open up the market for you. We get a lot of love notes from people. A lot of people say, oh, my God, now I finally see what's going on in the market. So we really hope that a lot of people, you know, use this utility. We're here to help you guys, and I want to show you the stream. Bear with me a second. I want to make sure. I don't know if Billy has it done yet. Let me, what the stream looks like. Oops. Billy, I'm not sure if you're streaming. I don't have it on right now.
Yeah, hi, Carl.
Hey.
I've got the broadcast showing here.
Okay, let me put the player back on.
Okay.
Okay, bear with me a second. I'm going to get it up. Bring a tab over for everybody. I'm going to go back to Follow the Bots. My pipe's a little slow right now. And so you know, I forgot to mention this. Tomorrow, you generally have to have a subscription. We're going to, oops, wrong button. Tomorrow we're going to open up the stream, so if you come by, the stream will be open for people to see, and we think that's pretty cool. I just need to log in because we have the stream behind a paywall. I'm going to go to real-time streaming. And then I'm also going to open it up to questions while that's loading. Phil is asking, so if you could see that now, what you're seeing is actually a stream on our website, and that's Billy's chart. And he'll come on the microphone and walk you through the thinking. So you'll get some real-time over-the-shoulder assists. Phil asked a question. I just want to start punching through this. If he has Infinity as a broker and they use Sierra charts, will Sceeto load in the chart? So yes, Phil, we support Infinity and Sierra. And then Ken is asking if this is available on Sierra with all the Ninja bells and whistles. Yes, it is. And then also, so people know, we consider if you're signing up for Sceeto, you're signing up really for our data. If you have Sierra and Ninja running on your machine, you're welcome as part of your subscription to run it on both applications and surface the information at no additional charge, because we just want you to have the data where you want to use it and repurpose it. Go to town with it. Okay. I don't think we have time to get into other markets because we are running late and we have some other commitments, dinner with the wife and kids particularly. But I know we ran a full half hour over. So an hour and a half of your time, I know at the end of the day when people are tired, I know a lot of people came in from Europe. It's super late over there. So that you gave Billy and I this kind of time and this kind of focus, we really appreciate it. I hope you learned something. I had a lot of fun today. Please sign up for a free trial. And we'll hope to see you all at the next webinar. Thank you so much.